Welcome everybody to the 40 Finance channel. My name is Jeff Beers. Today I'm talking about 4 retail stocks to hold for the long term in the midst of all the retail disruption that's going on right now with Amazon, declining mall traffic, all those things. It can be hard to find retail stocks that you feel like you can trust. These 4 right here I think will stand the test of time. And guys, hey, if you like this stuff, please give me a like or subscribe to the channel. Whatever the kids are doing all these days, it really helps us out. Let's jump in. All right, so first on the list here today, I want to show you where the retail stock index is. And this is the XRT. And the XRT represents the S&P Retail Companies. And you can see that it hasn't been a very pretty ride ever since about August of last year. The market obviously dipped in December, but really the landscape hasn't changed. It's a downward trend. It continues to be a downward trend over the last couple years, especially when you start talking about traditional clothing stores and discount chains. Those are one of the ones that are getting hurt the most right now with Amazon. So we see that retail itself is a little bit on a downward trend, but these 4 stocks I have for you today are sort of bucking that trend. All right, first stock on the list today is TJX Companies, otherwise known as TJ Maxx. This is a stock that I hold myself and got in about at the $40 level, and now today it's up to about $50. TJ Maxx, of course, is a discount retailer, but it also invests in freestanding stores. They've had a lot of success with maintaining their traffic. And generally speaking, people like to go to TJ Maxx because they like to sort through all the piles of clothes and knickknacks that they have there and look for name brand deals. So every time you go to TJ Maxx, it's a different assortment. There's a different amount of shiny objects you can buy from. And it's really been a great retail experience probably for like the last 15 or 20 years. So it's very strong. It has a dividend of 1.68%. You got a forward PE of 1768. That's coming off a current PE of 2071. So that's what we want to see as a declining forward PE. And the target price right now for TJ Maxx, in my opinion, as we look ahead to the next dips in the stock market, I'd like to see maybe picking up some more shares at $49. I know that that's not much farther down, but I've been watching TJ Maxx for over a year now since I've owned them. If you can get in at 49, you should feel pretty good about that. It may go even lower depending on what's going on with all this tariff situation, but I'd feel pretty good in the 49 range. Taking a look at the best performing analysts on tip ranks right now, they have a projection of TJX for $60 over the next 12 months. So again, if you can get in around the $49 level or below, you have some support from other analysts that's saying, hey, there might be $10 per share sitting in here over the next 12 months. I certainly think so. So keep your eyes open for buying opportunities for TJX. All right, next up is another stock that I just never see a strong downturn for over the next decade, and that is the Home Depot. So Home Depot has been a strong stock for, at least the last 15 years, and it will probably continue to do so. The thing obviously with Home Depot is everyone's always trying to improve their house, their garden, the need for tools. Contractors are always working on something, and even when economic times are down a little bit, it may affect things like home builders and people who are making new properties. But oftentimes when new home sales are down, what you'll see is a lot of people are investing back into their existing properties as opposed to going out and get a new mortgage for a new loan. So even when the housing market is down, Home Depot still has some tricks up its sleeve. And one of the things that's great about Home Depot is you have a dividend of 2.67%, which is pretty generous for a retail stock. You have a forward PE of 1732, and that's coming off a current PE of 1924. So again, we're seeing a couple points dip in the forward, which is a healthy sign. And from a target standpoint, I'd like to get into Home Depot right around the 180. So at 191 right now, I wouldn't say that it's drastically overpriced, but with all the uncertainty in the market right now, I think that you can try to hold out and get into the 180 level. That'll take you back to some of the lows that we saw, not only as I look at this chart right around February, but all the way back into fall. If you can get into the 180, you're doing pretty good. And don't forget this little gem from Home Depot, and it's not always fair, but every time there's a national disaster, whether it's a hurricane, tornadoes just happened, sad but true, those are kind of good things for Home Depot because people have a lot of work on their hands. They need a lot of different supplies. And if you watch the stock market, you will see that Home Depot generally trends up when there's a natural disaster in one of their key markets. So keep an eye on that. Okay, from a tip ranks perspective, best performing analysts have a median price target of $208 on Home Depot. Again, we're at 191 today. I put a target on it of 180. And the analysts go as far as 217 for the high, 208's the median, and there's one low ball in here of 180. So that's the range that the analysts are thinking. But don't forget, even with the stock price going up, you also have that 2+% dividend coming in each time. So that's really healthy. All right, next on the list is tried but true across any retail landscape. That is Walmart. A lot of people pick on Walmart these days because they say Amazon's the Walmart killer. Walmart doesn't innovate. Walmart doesn't have this, that, or the other. Fact of the matter is Walmart is gigantic. It's international. They have capital. They have the means to go out and essentially acquire or build any single thing that they want to. And their market isn't drying up. And probably you could argue in the worst of economic times, Walmart's going to do even better, right? Because people are looking for things that normally cost, brand names that normally cost X amount of dollars. They can go and get an equivalent product at Walmart for significantly cheaper. So I like Walmart to reign supreme in retail for quite a long time looking ahead. And similar to Home Depot, Walmart has over 2% dividend at 2.06. You got a forward PE of 2019 coming off PE of the last 12 months is over 35. So a steep decline in forward PE, excuse me. And target price, I think Walmart, it's a bit of an uptick right now since January. So it's flying, high. It hasn't broken out completely, but it's held on to its own even through the roller coaster of the first 3 months of the year. So trading at 100 today, I would say if you can sneak in at 95 on the next market downturn, you're looking at a pretty quality stock that pays a dividend that for the foreseeable future is going to be a big part of American shopping. Okay, on the tip ranks analyst dashboard, you see we got a target price for the analysts of $113. The high's 120, the low's 105. So again, just like the other three that I mentioned, there's a couple easy dollars, so to speak, that can be made with these trustworthy companies that also pay dividends. So not a lot of risk here. You're not going to wake up and see Walmart jump 50% in one day like you would a penny stock. But as in terms of slow growth, it's really hard to argue the trajectory you have here with stocks like Walmart. All right, last on the list here today, I sort of wanted to pick a specialty store, and I spent a lot of time looking at specialty stores, and one that I was already familiar with is Ulta Beauty. Okay, and Ulta Beauty has been on an upward trajectory over the past 3 or 4 years. They have essentially changed cosmetic shopping for millions of men and women across the board. So Ulta has a really strong presence in almost every major market, and people really resonate with their store layout, with their customer service, and they've since gone on to even acquire like their own signature brands. So like Kylie Jenner, I think, was one that signed with Ulta to do an exclusive line, and that is great when you can work with influencers and get them to go only to your store to buy products. And so Ulta right now has changed the landscape of beauty retail. They have a forward PE of 21.35. That's coming off of 29.14 from the last 12 months. So again, progressing in the right direction. The only thing I'm going to comment about Ulta from a target price perspective, I'd put it in at 305 or 300. It's been on such a big run over the past 3 years. This chart here looks a little bit up and down, but the bottom line is it's been nothing but positive news. Definitely if you see it dip under $300, I would be all in. 305 I think is still a good price. And the only difference with Ulta is it's a growth stock in the sense that there's no dividend. The price is going to go up, they're not going to pay a dividend, and you're probably looking at continued growth for the next 3 or 4 years before they even consider paying a dividend. Okay, so on the tip ranks dashboard, we see that Ulta is very popular from a price target standpoint. We got a median of 364. That's up from 313 or so today. You got a high bar of $400 per share and a low of 303. So guys, if you sense that the market's going down and you're looking for a hot retail stock that has strong fundamentals, Ulta might be a great way to jump in, buy some shares to hold for 1 to 2 years, and make a cool $100 if you get it at the right time. So there you have it, guys. Those are my 4 retail stocks to hold for the long term. All these stocks have great fundamentals to them, and I think that they're safe plays across the board. And if we see the markets dip coming up in summer, which I suspect we will, with lower trading volumes, the incessant noise about tariffs, I expect some dip into July and possibly into August. And when that opportunity comes, you should consider some of these stocks here and maybe grab a few shares for yourself. Hope you guys enjoyed this video. We'll see you on the next one.